Hello, everybody. How is everybody doing? This is Stanley. Welcome to our YouTube live event. Today, we're gonna talk about something quite interesting, which is, of course, about the market crash. If you have been investing in the stock market this year, you know it has been a volatile year, and what a ride it has been. And just these 2 days, market has been seeing some correction, and maybe on your mind you're thinking, is it time to start going into the market again, or should we hold and wait for a while? So I just want to share a little bit about how I'm thinking about everything regarding the market, and how I tend to manage my own portfolio during current times, and just share some of these technique that I use and strategy that I use, and hopefully give you some ideas on what is your next step, right? Give me a minute while I set up the presentation for you guys. All right. And today I'll just have a short, maybe about 10 minutes, you can call it a rant, 10-minute rant on my own strategy of what I'm thinking, and what is the market been doing, and how we should react to it. And after that, I'd like to take some of your questions. If you guys can hear me, why don't you put on the chat on our YouTube live and let me know where are you connecting from. If you have any question for me, feel free to just type it in there. I will get to the question at the end of the session today. And of course, along the way, if you see something interesting, and if you want to let us know some of your own opinion, feel free to comment down below as well. I see some people commenting. Cecilia, how are you? Nice to see you. And Steve, nice to see you. And let's get started. Of course, this is our usual full disclaimer. Everything that I'm saying here is just my own opinion, and I'm sure you guys are extremely smart investors. You can take what I commented here and put it into your own analysis as well. Okay, and just to let you guys know as well, we do run a members club, which is called our VIA club, and we tend to only open it once every quarter, and the registration for our VIA club is also open this week. If you're interested, you can check it out. We'll talk more about that later, but just look at the market, how it has been reacting this full year. Of course, let's talk about the US market first, the S&P 500. It has been quite a volatile year, dropping about 30-40% and then rebounding around another 50% since March. But overall, for the whole year, it has only been up about 5%, right? And if we include yesterday's slight crash, maybe it's only up about 3% for the year. Not very exciting, but of course, it's still good to be in positive territory. Because if we look at other markets like the Singapore market, the STI, it has actually been down about 22% this year, only about up 12% since the crash in March. So it haven't even recovered back most of the losses since the beginning of the year. Quite similar case in Malaysia as well. The KLCI is down about 6% currently, only rebounded about 23% since the crash in March. If we look at Hang Seng, is also quite similar. Hang Seng is actually down 14%, but with the news that Alibaba and Xiaomi is going to be added into Hang Seng soon, maybe that could improve a little bit. And Hang Seng was quite lackluster this year. And that is a key problem, why is the Asian market doesn't really follow the US market. The US market go down, we follow, we go down, right? But when they rebound, we don't really rebound with them. And it has been true for many, many years, for decades actually. And that's, I feel, my own personal opinion is that maybe because the world is becoming smaller and smaller, and today's age, the large company will just get bigger and bigger, and because we are living in a globalized market right now, and smaller companies like those in Singapore or Malaysia, they get squeezed out from the larger companies in the US, or in this case in China coming up. And the US market also control most of the financial sector globally, right? If you just think of how strong the US dollar is as the de facto global currency, right? All of us might keep some of our savings in US dollars, but you don't really see US investors saving some ringgit or Sing dollar per se. And that's just the way it is. And they control most of the financial sector. And we see it in the last crisis, in subprime mortgage crisis in 2008. Their crisis has affected us. But during the Asian financial crisis in 97, our crisis didn't really affect them at all. This is just imbalance in the market, and we have to understand it. But it also creates a problem for us because we might feel that we need to chase the return. The US market is returning, has rebounded so strongly, especially in the NASDAQ, but we're not seeing it here. And it kinds of bother us in our psychology. I see it more and more investors are starting to take on more risks and trying to chase the return because they want to make up for that lost time. And I see many investors starting to go into smaller cap stocks, going into option trading and taking more risk in hope that they can chase back that return that they lost out in the US market. I feel that is quite a dangerous way for us to go forward, especially when the market is rising. Take for example, right? I recently just scrolled through my Instagram and I see this. Even billionaires are humans too, right? This billionaire, I don't know why he's not managing his business, but he went into stock trading and lost close to 50 million within the short span of a few months. And it's not surprising. Everybody sees that the market is rising and feel that it might be an easy money to gain. I remembered in recent news in Singapore, there's also quite a number of news that even financial advisors started to trade into margins and losing near bankruptcy. I think what we're experiencing here is what we call fear of missing out, like FOMO, if you know the acronym. It's just that when we see other people making that money, we feel that we deserve that as well. We should be making that return as well. But I think we tend to forget that investing is not really a race, right? When we are all investing in this together, it doesn't mean that I'm competing with you in this investing race. There's no special prize if you win or if you lose. But remember that why we need to invest in the first place. For most of us, our objective of investing is really to build up that safety net for the future, or maybe for your kids, maybe for retirement. But it's for something that is not the near term, not next year. Maybe it's something a decade later. And so we should really take that time frame of why are you investing in the first place, to build the safety net for that long-term future. And we should spread out a little bit and maybe go back to basic a little. We don't have to feel bad that other people are making money, and we shouldn't risk our money just in hope that we should catch up with the market, right? Especially when we see the current pandemic right now. Traditional business is not growing, and it might take a while before business really start taking up as well. But we see that the market keep on rising even though business is not coming back. It means that the market is getting riskier and riskier, right? The fundamentals is not there, but people are chasing the market. It means the market is getting riskier. So instead of chasing the market together, we should actually turn to become more risk averse, right? It means that as the market becomes higher and higher, it's becoming riskier and riskier, we should actually take less and less risk to protect ourselves for the long term. And when we say being more risk averse, I'm not saying that keeping things in cash, but rather the selection of stocks that we choose, the criteria that we choose should become higher and higher. We should go for higher and higher qualities of stocks rather than chasing small caps or even driving into options just to chase that return. And some of the things I feel that if we will go back to basic and go back to quality again, some of the things we should look for right now are stocks that are companies that have stable growth, very, very stable growth, or I'm not saying that low growth is stable growth, right? But rather the growth is quite consistent. The company is quite defensive. Even during bad times, you can see that they are growing slightly or their drop is not that significant, right? Those are the companies we should be looking at. And companies with low debt in the current pandemic right now, because most of the huge economy, they are printing money, QE is starting again. So we see a lot of free liquidity in the market and fueling that market boom. But the company itself, the business-wise, they still need to be run very well and have low debt in case that liquidity dries up and they still have their own funds to continue on business. Right, that's the second point. And we need to look for companies with good free cash flow. That's very important. Company without free cash flow means that they have to put on more debt just to grow. So we need companies that can generate cash flow at the moment and they can grow by themselves, right? Good businesses, as in good brands, companies that is very established and that they have been surviving many crises in the past. They are true tested companies. And of course, lastly, management. We tend to disregard this, but actually having a very honest management running the business for us is very important. If we have a great business but run by management that is not particularly honest to manage to shareholders like ourselves, especially minority shareholders like ourselves, end up we might not even get to enjoy the profit that the company is making. So these are kind of the things that I think about when I'm selecting stocks this year. And, this is my personal portfolio, which I share on our VIA Club, which I update it quite regularly on a monthly basis. Some of the stocks that I bought this year, like Microsoft in particular, these are companies that fulfill the previous 5 criteria that I talk about, right? And I know that throughout this pandemic and this crisis, I'd rather be owning such established company like Microsoft, and I'm selling off some of my weaker companies and some of my mid and small cap that I'm no longer that confident about. I'd rather sell them at a loss and put my money into higher quality business, because I know if the crisis prolongs, these are the companies that have a higher chance of surviving and thriving, right? Okay, and this has been, we track my own portfolio within a VIA Club as well, and this has been how my portfolio has been doing. Not fantastic if you compare to the Nasdaq index, but I would argue that my portfolio has been built in a much safer manner, and I feel very safe. And you can see that even the crash during March, I didn't suffer a huge crash at the time. I would say that my portfolio are generally more defensive in nature, and that's the way I like it, to make it so that I can sleep soundly at night. I don't worry about my portfolio, even though the stock market has been quite volatile in recent months. And I go into much more detail within VIA Club as well on thoughts and how I manage my portfolio, and even trade alerts. On every time I make a trade, I will let my members know, right? I think I have a few questions coming in. I would like to answer some of your questions, right? But before that, let's look at, I just want to share a little bit more about VIA Club and some of the full features that you might get as a member if you're thinking of joining our exclusive club as well, right? In our VIA Club, we have our weekly market report. Every week, I'll do up a report for you guys on either what I think about the market or some of the companies that I've been researching on personally. And also, every month, we will present a stock of the month report, which is the one stock that I like for that month. And we track the performance as well, right? We can see some of the companies that we have presented over the past, I guess, a year and 2 months, over 14 reports over there. And most of them has been performing pretty well so far. And also, our members will get a yearly stock guide. Every year, in the beginning of the year, January, we'll present a stock guide to our members. And so far, we have done it for 4 years. And it also includes a grand webinar where we share in a live webinar with our members on why we choose this stock and why we like them, and also fill up some of the question a little bit, right? And of course, members can get to the archive as well, all our past reports. They can get it. And the most valuable of all, I feel, is really our community, right? Joining hundreds of our members currently, already quite active on our Facebook group, and many of them are actually very experienced and much more knowledgeable than me. And I myself is learning from them, and we're having a great time always discussing about stocks on our community forum. Right, and of course, we are holding a members live event as well, just discussing how the market is once in a while. We're actually doing one next week as well on a review on our Stock Guide 2020, and also answering some of the questions that members have. Right, and so these are all the features that you actually get that you don't get from our YouTube channel or also on our free site at valueinvestasia.com. And recently, just 2 days ago, we reopened the registration to it, and out for a 1 year of membership is only $158 per year. And of course, we have a 14-day money back guarantee, and you can choose to test it out. And if you're unhappy with it, just let me know. And we have refunded to members that don't feel that our club is particularly suited to their needs. That's fine. But I hope you check it out as well on our VIA club, and the link is bit.ly/club VIA, right? And let's go to some of your questions. I'll put the link down on the show note as well, so you can access it and view it later on. But let's go back to your question. Okay, let me on my phone a little bit. Hi, whoa, sorry, I wasn't looking at the comment section, but now I see more and more of the comments coming in. Let me just refresh it a little bit. Okay, hello guys, how are you? Wow. Philip, Jonathan, Justin, hi, how are you? All right. Okay. Housekeeping, will this chat be replayed? Yep, it will be replayed for 1 week, and then we will just hold it off publicly, but it will still be on archive for our members. Singapore, Justin is asking, hello, how to screen for good stock in Singapore? Right, there's a few screens that I use personally when it comes to screening stocks. In Singapore, actually, if you go to the National Library, they have a good Bloomberg machine and you can use it. Sometimes I go there, but from just website, some of the websites I use are Share Investor that I use to screen, and also Financial Times. Interestingly, Financial Times has a pretty good screen, not just for Singapore, also globally. And also SGX itself, if you just go to SGX website, they do have a screen as well. These are some of the things that tools that I use for Singapore stocks, right? Adrian, hello. PE is reaching very unhealthy of 30 times. Will you hold your cash or buying stock? Yeah, personally, I don't worry so much about short-term market overvaluation and things like that. For me, when I buy a stock, I think of would I want to hold this stock for the long term? Meaning that would I hold it for, probably give it to my kids in the future for their education, and maybe 10 years from now. If the answer is yes, then I will invest in that stock, and I would hold it even though it's might be overvalued. That's because if I start selling stocks when I feel that they are overvalued, then I would fall into the game of trying to time the market. So every time I'll be looking at when should I buy it back again? Will it really drop? We never know these things. And if we fall into the game again to time the market constantly, then we will end up making more mistake than making the right decision. I'll give you an example. Even 5 years ago, I'm already feeling that the market is quite high, right? 5 years ago. And if I have sold some of my stocks that I feel are overvalued at the time, I actually never get the chance to buy it back again because they never drop it back to that price level again. The market has stayed high for the past 5 years. So instead of just trying to time the market, I think it's better to just stick with high quality companies that you like for the long term, And since we are investing, we should be investing with excess cash that we have. So these are cash that doesn't affect our livelihood. These are not part of our emergency fund, right? These are really excess cash that we should have to put aside, and we don't need it. And so even if the market drop for a while or they rebalance for a while, it shouldn't affect our lifestyle, and it shouldn't affect us if we are investing for a longer term, right? Great question, Adrian. I like that. Hi, Ben. Okay. So you're saying what's my strategy to the end of the year? Yeah, I think I shared it during our presentation just now. I tend to become more and more cautious in the kind of stock that I choose, and try to choose higher and higher quality stocks. And those are the five factors that we talked about just now. Those are the five factors that I try to adhere to. And some of the stocks that I bought this year, if I remember correctly, I bought Microsoft and I bought Adobe Systems. And so these are the stocks that I feel really fit in well with the criteria that I give myself. And I try to stay away from more speculative companies that might not even be making profit. I know some of the less profitable business, like in Singapore, C Group, or of course all our favorite Tesla, has been amazing stocks this year, over the past few years. But these are maybe just not the stock for me, or even if I buy them, I buy it at very, very small allocation. It's just from a risk standpoint, I want my portfolio to be more everlasting, more evergreen in that nature. So that's how I think about it. Right? ABC Dev, condolences to Tesla shareholder. I don't think they need any condolences if they have been holding it for a while. They have been doing much better than all of us. Adrian again. Warren Buffett is buying Japanese stock. What's your view? Is he trying to cash into Japanese? I don't study Japanese stock that much, but Japanese stock has been considerably more undervalued than the rest of the world. And it has always been the case. I think deep value investing work quite well in the Japanese stock market from what I know, but personally I don't really invest in Japan, so I'll leave it to those who has more knowledge on the Japanese market. Right. Kate, how are you, Kate? How do you invest in China? So Chinese stocks, they are mainly they're mainly listed in either the US market, the Hong Kong market, or in A-shares directly. So right now we can actually access all three markets, no problem. If you have full-fledged brokerage, you can access the US market. Some of the ADRs of Chinese stocks, they are listed there, like Baidu, iQIYI, Alibaba, they're all listed there. Or you want to access them through Hong Kong stock market, you have your Tencent, Meituan Dianping, Xiaomi, they are also listed there. And also more and more companies are also going to list in the A-share market as well, since A-share has done some restructuring and allowing dual share structure and all that. So we will see more and more listing coming to A-shares as well. So do check with your brokers. If you need to sign a form or anything, maybe that's all you need to do, and you can gain access to all this market. All right. I'll try to answer as many questions as I can. Questions more and more questions coming in. Sim, you're asking, is it a fair price to buy Tencent now? PE at 40. I'll give you. I would say at the moment most tech firms are still reasonably priced. I wouldn't say that they are extremely overpriced, even Tencent. And I'll share with you when I bought Tencent. I think about 4-5 years ago, when I bought into Tencent. I'm still holding it now, and I bought it at a PE of around 60 to 70 times at that time. It feels very high, and it's one of the first stock that I bought above 50 times PE. But looking back, it has been a great decision, mainly because I'm investing in high quality companies that has been very consistent in growth. Right, Tencent has almost been growing every single year since they are listed. And if you just think about the prospect that they have right now, being one of the two largest tech firms in China, I feel that the prospect is quite good for them and will continue to be very, very good for them for the long term. So I'm still quite happy with 10 cents. Provided you have a long enough time frame, that is. And for me, I'm holding on to it. I'm very happy with it. Right. YS is asking, how do you think about the Hong Kong market? I'm not sure which sector you're talking about, but if you're talking about like Hong Kong domestic companies, I myself don't really invest in them. I don't want to be too political, but generally I feel that the political situation in Hong Kong is quite uncertain, and I feel that I would do better if I just invest in mainland Chinese companies rather than Hong Kong focused companies. So that's just my thought. Victor, what tricked the tech stock slide? Is it due to the SoftBank news? Does anybody guess? I wouldn't know. I don't try to analyze why market move up and down every single day. I think it has done pretty well this year, and if I have at least a 5-year time frame, if I have to choose, would I rather invest in stocks right now or keep my money in cash for the next 5 years, in fixed deposit for the next 5 years? I would always choose to invest, even though we might not know if the market is overvalued or not. That's because even if a market crash is coming, a typical market crash lasts about a year, and they recovered. Even some of the longer market crash in recent history, it takes about 2 to 3 years for the market to recover. So if I have a 5-year time frame, then it doesn't matter even if I buy at a peak today. More than likely, in the next 5 years, I would, if I invest in the right companies, right, more than likely I will still come out on top than cash, which is giving us close to zero interest rate, and it could still be going down, right? We never know. Hey, good question. Abel, any thoughts on Tesla? Tesla is a stock that I don't own. That's ironic because my history is I'm actually a trained engineer, and my focus is actually automotive engineering. So I'm actually an automotive engineer by training, but I wouldn't consider myself an engineer right now. And maybe I know too much about the auto industry at the time, and I fall into the old school of thinking that automotive is extremely competitive and difficult market to be in. So I never really look at Tesla, but congrats to them. I would say that they really turned the corner. I think Tesla has turned the corner and becoming a profitable company if they want to be. That's amazing. Sorry, that's amazing. But they have do it through the market support as well. Because their stock price is always so high, they are able to raise more and more money constantly to fuel that growth. And the market needs to continually support them. If not, they might run out of options in liquidity. So that's something they need to think about. All right, next question. I'll try to choose some of the more interesting ones. Maybe another 3 questions for today. From a Cape perspective, Hong Kong market is way cheaper than other market. Will you be skewing your future videos to Hong Kong Chinese market in the future? Not really. I try to cover interesting companies that I find along the way in my own research. In my own portfolio, I invest in 4 key markets, which is the Singapore market, the Malaysia market, the Hong Kong market, Hong Kong and China, right? A shares and H shares, and so the US market. But majority of my stocks are still in Hong Kong stocks and also US stocks. So I would say those are my main hunting grounds. And why is that the case is because if I want to buy long-term growth company, like company that can grow for many, many years to go, I want a company that has a large enough addressable market. And this company tends to be either Chinese companies or US global companies. So these are the 2 main markets that I look at, and I will continue to look at all these companies. Okay. Lombo and Honda. Okay. Good on you. you are saying, hi Stanley, one of my best stock for the year is Microsoft. What is your view on repurchasing more this year if there's a drop in pricing? I also like Microsoft a lot. It is becoming a more and more significant part of my portfolio. Um, I like it because mainly all their segment of their business is growing and quite healthily, and I think they will be very dominant in years to come, especially in cloud computing. And you know, when you talk about repurchasing it this year, it depends on your portfolio. For me, I have a very diversified portfolio. I own close, I think 40 plus stocks. So every stocks that I own is only about 2 to 3%. So I try to keep that sizing. And Microsoft is around 3% of my portfolio now. So even if I feel that it's cheap, I might not add on to it. I'll just let it run by itself. So that's just how I think about managing my portfolio. You can think about how you want to manage your portfolio. Some people has lesser stocks, but if you're comfortable with it, that's fine. But think of it in terms of your portfolio. Do you need more Microsoft at this point in your portfolio? Maybe that's a better question. Hi Jun, what's your view on Razer? Interesting company. Interesting company. I didn't invest in them mainly because they're still in just the hardware peripherals market, which I feel there's nothing special about that market. They have a good brand, and I use some Razer products, but to be honest, I don't feel that brand is as strong as say maybe an Apple, where they own their own ecosystem. To me, Razer is one very cool brand. But one interesting aspect of their business might be their Razer Pay business, which they bought over from, of course, MOL. Now, which has, I think they are doing pretty well. They are powering some of the back end of some of the e-commerce site, both in Singapore and Malaysia, maybe across Southeast Asia. So that might be something to look at, and they're also applying for the digital license in Singapore. So if you buy into Razer right now, I guess it's more of a speculative bet that they will make it work in their finance business rather than their traditional hardware business. But if you want to make that decision on betting on, say, the digital finance sector, there are many other options as well, not just Razer Pay. Yeah, you can look at that. All right. Benjamin is asking, what's your thought on going to glove company like UG Health and Sritang? Of course, these companies are listed in the Singapore exchange. Glove company, I like them, but generally I try to focus more on the larger guys, just because they might already have the more established presence in the market, so their sales will be more stable in the nature. Whereas, of course, smaller guys like UG Health, when they grow, of course, they are growing very fast. But when they drop, they might drop extremely fast as well, because there's no clear indication of how sticky or how established their relationship with their customer is. But rather, if you look at Top Glove or Harderlager, more or less, I'm more comfortable with them. But of course, I myself is not investing in glove at the moment. So that's that. Vanessa, for Hong Kong, for China stock, is it better to buy Hong Kong exchange or US? Is there a difference? Typically, there's no difference. But if you buy US stocks, of course, if you're not a US resident, there is 30% withholding tax on dividend. So if your stock pays a dividend, then that might be an issue for you. Right? Okay. Let's look at some interesting questions. Desmond is asking, what's your future outlook for ComfortDelGro? Generally, I try to stay away from ComfortDelGro. Not saying that it is a bad business, but just I feel the growth is not really there for me to get interested in them. I know they have came down quite a lot this year. If you're looking for a turnaround, possible, but I personally try to stay away from turnaround companies because my track record on investing in turnaround company hasn't been that great. So unless you have special insight on really how they can turn around, but I don't feel they're anything special, and I try to stay away. I rather stick to companies that is more consistent in their growth, to maybe in a way, right? Okay, maybe let's have one last question for the day. Heard Ming Lee heard that October is a bad month to invest. Should I stay away or take profit? I'm currently looking for good stock to build my portfolio. Right. I don't really think about the month to month of whether this month is good for buying or next month is good for selling. I feel if we want to build a portfolio and it's for the long term, we should treat it like buying maybe a property or something, right? If we buy a property, most of the time we don't try to sell it the next month. I think we should have the same approach. Just because the stock market is always there and you can see that the stock market is going up and down, doesn't mean we should put an action to it. The price is just there to serve us. We shouldn't become slave to the price, and buy stocks that you are comfortable holding it for the long term. Some of the best investors, they build their wealth by just holding on to stocks, because stocks traditionally has shown us that they are better store of wealth. They are a better storage of wealth compared to cash. So if you have some excess cash that you're keeping just in fixed deposit, I see myself as a stock collector. I'm just choosing between, should I store my wealth in stocks or in cash? And I never heard a billionaire saying that I make my wealth by storing my money in cash, right? So that's how I see it. And that's why I tend to be more biased into storing my wealth in stocks, even though it's volatile at times. I can live with that volatility. So yes, that is something for you guys to think about. And great. I have a great time chatting with you guys, but do remember, I actually will have another session tomorrow with you guys. I'll share with you 3 stocks that I feel are great for the future, for long term, and 3 stocks that I'm holding for the long term, and 3 stocks that actually adheres to the 5 criteria that we talk about today in our presentation. So same time tomorrow, 12:30 in Singapore time, 12:30 to 1 o'clock p.m. So thank you for joining your lunchtime with me, and I'm starving right now. It's time for my lunch. All right, thank you, and see you tomorrow.